And we're live.
Hey, everybody, Simon Dixon here, and welcome back for another episode of Simon Dixon Live. Great to be back. As always, we're going to be covering, we've got a lot to cover today. Two really big topics in my step of the world that I want to update everybody on. The first one is obviously the Bitcoin ETF. I want to go over that and answer as many questions as I can as well on what that means for you and what that means for Bitcoin. And also the update on the monetary renegotiation that I've always been talking about, which is central bank digital currencies. So some of the 2016 commentary that I was giving on central bank digital currencies are now going in full swing. And so I want to cover all of those for you. I'm not in the studio setup today, so I've just got the old camera from the computer and a USB mic. So hopefully everything's coming through, but let me know if the sound's not coming through. We got Azad here moderating as always. And just before we jump into the content, let's remember that you can get your questions answered. There's already been a lot of questions asked. Or you can upvote other people's questions. As always, we use the good old Slido board, which Azad will share on the screen shortly. Or if you just head over to Slido, type in SD10, and you'll be taken right here. We've already got a lot of questions, so it looks like it's going to be over to the upvotes because I got a lot of content that I want to cover today. Hit that QR code and you can upvote other people's questions if you want them to stand a chance of getting answered, or upvote your other questions and you can lobby in the comments or the live chat and try and get other people to upvote. So let's jump straight into the Bitcoin ETF news. In the time that I published that I'm going to be going live, the title had to change from ETF coming ? Which the answer was yes, versus ETF, what does it mean for you? And that's because things are moving so fast right now. And I want to make sure that everybody has at least a decent understanding of what the ETF is, what the negativity is, what the positivity is, and so that you can be very informed with what to expect next. So let's jump straight into that. And then I also want to jump into a video where I'm going to be doing like the emergency broadcast when I did the IMF. I want to go through the announcement from the UK Chancellor of Exchequer, where he's been getting together the G7 cronies in order to execute the monetary renegotiation and try and realign Britain's significant before the US dollar became the world reserve currency, and what that means in the central bank digital currency wars. So SD10, if you want to get your questions asked, remember, if you enjoy this topic, hit us a quick like. And if you're not a subscriber, hit subscribe, hit the bell symbol, hit all, and YouTube will go guide you when we're going live. The final thing we're going to be announcing, and I'll share more details towards the end in the Q&A, is the 1 year celebration since the 4-part free video series where I shared on retirementplanb.com how I'm investing $1 million in my savings and the incredible returns that have been achieved from those that implemented the portfolio. We're going to be doing, as a celebration, a live masterclass series where we take each of those videos and we review for those that need an update on what's been happening since then and how everything's performed. So we're going to be rolling that out in November. So hit the subscribe button because you need YouTube to give you those notifications. We're going to be doing some live marathons. And of course, we're going to be working with those 500 people on the big waiting list of people that want to join us for the Retirement Plan B Wealth Management Program. So let's jump straight into the ETF. So I think let's start from the beginning. For those of you not too familiar with ETFs, ETF, and I think the first distinction to understand is the difference between retail, indirect retail, and institutional. So all the craze in Bitcoin has been about corporations and institutions joining the Bitcoin, the retail front run, and retail just means everyday people. And Bitcoin was really a grassroots movement. So when I presented at the very first Bitcoin conference, there was about 50 people in Prague, and it was a grassroots movement of cypherpunks, anarchists, that really believed that there was alternative to banking and technology could be used to transform the financial system. And then more and more people got involved, and it was mainly retail. Now, Bitcoin is one of the first assets in the world where retail front run Wall Street. Normally, if you look at getting into private equity, for example, you have venture capitalists that get access to deal flow. And then the retail only get involved once it floats on a stock market, and then venture capitalists, they offload all their bags to you. Even at Bank to the Future, we created a way for people to get involved in private equity before it went on the stock market. And we created a way to access the high risk, high return asset class. But that's the difference between retail, institutional, and what I call indirect retail. So retail is just the point at which everyone can invest. And now Bitcoin has started to go beyond $1 trillion market cap. The retail that weren't listening to all of the people telling them to get into Bitcoin can now finally wait for the ETF so that they can get on board in a way that they're used to in their brokerage accounts or whatever it may be, and not have to worry about the whole process of owning their own private keys and taking away one of the primary use cases of Bitcoin and just giving them exposure to Bitcoin. The reason why they might be doing that is because they are still fiat thinking. If you haven't watched last week's broadcast, check out that, where I covered the difference between Bitcoin thinking and fiat thinking. Fiat thinking is where you see Bitcoin as a mechanism to make more fiat. And so you're always focused on the price, and you're driven into trading and creating taxable events and making all the mistakes that most retail people do when they get into Bitcoin. When you make the shift is when you see fiat as a mechanism for earning more Bitcoin. Mental shift, which is really the difference between somebody that has fully onboarded into Bitcoin versus somebody that is still at the phase of seeing it as a get-rich-quick scheme, a speculative vehicle, or a way of furthering how much fiat they have, not understanding the true journey that fiat takes you to. But retail is just everybody. Indirect retail, people don't talk about this too much, but really most institutions, what people call institutions, are just pulled together funds from insurance and pensions, and that's everyday people. So it's retail, but they outsource their decision making to a financial institution, which is indirect retail. And then you have institutional. Institutional is where asset classes are restricted just to accredited high net worth and institutional professional venture capitalists, and they meet certain criteria by global securities laws. And those are the precursors to the Bitcoin ETFs, like Gbtc, which is a trust, and we'll jump straight into some of these things. So while most people talk about how the institution is the vast way of money, if you look at the difference in certain markets in the world, so for example, China is a very retail-led market. The institutional market has developed a lot, but it's a lot less sophisticated than in countries like America, for example, where most of the volume comes from institutional. But the vast big sums of it comes from indirect retail, which is people's pension schemes, rather than institutional, which is where universities and colleges, for example, pull together the vast crazy fees that they're charging for their degrees because they need to push up the price, simply because the demand for high grade, high university and college education is so high. They end up charging like hundreds of thousands, and they become the richest billionaire endowment funds, where they're trading just the money that they took from a bunch of students that wanted to get education in a competitive market. So that's retail versus indirect retail versus institutional. So then what the evolution of financial markets is. So in the early days of the stock markets, back in the roaring, Great Depressions of the 1930s, the stock market speculator really had to have a skill in picking the right stocks. And you had to pick the right individual stocks. And it turned out that people would come along and they'd say, well, you don't know what to buy, so I'll make that decision for you. And we had the evolution in financial markets of mutual funds and unit trusts in the UK, and various other types of financial products where you engage a fund manager that charges normally really high fees, that are 18 different types of hidden fees that are hidden into a mutual fund financial product. And not necessarily the most tax efficient way as well, because of the the incentives to overtrade and create brokerage fees and all the different types of fees that can happen in mutual funds. But you outsource the decision making of what to buy and sell to the mutual fund. The innovation that came along was passive index funds. So this is where you, rather than having to pick 500 different stocks, you had the S&P 500, which essentially tracks the index. And you just buy into that fund, and it's managed by a fund manager that can charge much lower fees because they're not actively trying to beat the market. They're passively just trying to track an index, and you get exposure to it. The next innovation and evolution that came along was what's known as the exchange traded fund. So with mutual funds, you can only really trade them once a day, depending on the type of product. And they're not traded similarly as exchange traded funds. Whereas exchange traded funds are where you have a stock that is backed by a particular asset or commodity. So the Bitcoin ETF would be backed by Bitcoin if we had one. We do have a Bitcoin futures ETF that we're going to be covering today, but we don't have a Bitcoin ETF yet. So an exchange traded fund means that you can trade and you can get exposure to Bitcoin, and you can hold it in your pension or whatever it may be once you have the Bitcoin ETF or the Bitcoin futures ETF. So unlike a mutual fund, which is traded once per day, ETFs are traded much like a stock, where they have opening hours and you can trade, which is inferior to Bitcoin, which is cryptocurrency exchange, which is a 24/7 market. But people obviously are choosing the ETF because it's some people would choose that because it's what they're used to, which may or may not would really give exposure to people to the asset class, and then they graduate to owning some of their Bitcoin and getting some of the true advantages to it. Just to give you an idea of the size of the market, there's about 10,000 ETFs traded on about 80 different exchanges. But what the news is about is not the ETF, it's a US regulated ETF. Because if anyone is a follower of my channel, you will know that we are in a US dollar backed world's largest regulated Ponzi scheme, and therefore US dollar denominates the vast majority. If you remember my 4 3-part video series, I talk about the importance of US dollar exposure, because if regulators are going to, policymakers are going to give up capitalism and everybody's freedoms, they're going to drive the economy into a communism, large government-led economy, and US dollars will try and retain their position in such an environment by excessive money printing through the United Soviet States of America. And so many, this is where we talked about the importance of still, if you remember back to the video series, it was about making sure that you are ready for any market that goes ahead, and the different types of outcomes that can come out of the monetary renegotiation that will be covered in the second part of this. So many have tried the Bitcoin ETF. I remember back in 2013, when the Winklevoss twins got into Bitcoin, thanks to Charlie Schwem, when they invested in BitInstant, which was a precursor, one of the very first companies in Bitcoin that made it easy for people to onboard onto Mt. Gox. And that's why it was called BitInstant, because you could instantly get a dollar balance, so you could buy some Bitcoin on Mt. Gox, which is a now defunct bankrupt crypto exchange, which had approximately 70% of all the trading Bitcoins at one stage, and now has billions and billions of dollars stuck in a trust liquidation proceeding that people are voting on to still try and get some of that money and Bitcoin out. I digress. But many have tried to get the Bitcoin ETF. We still do not have a Bitcoin ETF in the United States priced in dollars. So we had lots of different types of products. And the SEC, the news this week is that the SEC has now approved a US dollar, US regulated, denominated, exchange traded fund that is backed by Bitcoin futures. So the real thing to be cautious about here is that before the ETF, everyone was talking about the institutionalization of Bitcoin, and the catalyst for the bear market last time. Not saying this will happen again, but to be aware, the catalyst of the market, the bear market last time, was when CME futures got launched in Bitcoin, and that made the top, and it became a real buy the rumor, sell the fact type mantra. If you are a short-term trader, which is a dumb thing to do, if you watch my channel, you know that I never encourage people to be short-term traders, because 90% of people, as I was a market maker in the financial markets, we used to manipulate the shit out of markets in order to drive people into making silly decisions because they're trying to see it as a get-rich-quick scheme, trying to trade in and out, and they're fiat thinking. And so that's what, and you create taxable events and you create a mess for yourself and all sorts of stuff by being a trader. Instead, being an investor is the only equalizer that I try to always share in that 3-part video series. By the way, if you haven't watched that video series, it's still as relevant today as it ever was, but we're going to be doing in November, they are going down, and we're going to be doing the live masterclass where we'll be reviewing those videos for those of you that hasn't watched it again. But by the end of October, those will no longer be available on the Retirement Plan B website. But don't worry, we've got the live masterclass coming up that we'll be sharing more details on as well. So the SEC has not approved a US denominated Bitcoin ETF, but and they've been trying, entrepreneurs and companies have been trying since 2013. The SEC rejected them all. In fact, it was only this created a real arbitrage market for institutional versus retail, institutional, and retail. So retail were driven and they were front run because they couldn't get exposure through any of these products. They all had to buy the underlying Bitcoin, and this led to the growth and tremendous growth of many of the cryptocurrency exchanges that weren't even involved in the fiat system. Slight tangent, but exchanges like Binance, the largest one today, they didn't even have to have bank accounts because they used Tether as their bank account essentially, and allowed Bitfinex to hold all the dollars in their bank account, which led to some of the challenges that we're experiencing when the Binance grew so big. Tether had to have all of these dollars in their bank account, and then that led to a banking problem, which then led to having to use shadow bank financial institutions to service payments, and the rest is story. I digress again. But in 2013, Barry Silbert launched Gbtc, which was a Bitcoin trust, and essentially that was a trust company that would issue shares, and then it would go out and they'd buy some Bitcoin. Now, the challenge with Gbtc is that firstly, it's only available to accredited investors because it has to trade in compliance with securities laws. And if you want to decrease the number of shares or increase the number of shares, that is considered a offering of those shares. And therefore, if it was open to retail, you would have to get every single time you increase the number of shares or decrease the number of shares, that would require another regulatory approval, which takes months, and therefore it makes it and renders it useless for doing that. So what that meant is that it was open to accredited investors, and that ended up locking up approximately, today I haven't looked at the latest stats, but almost about $40 billion of Bitcoin, 300,000 or in counting Bitcoin. If you're in the live chat, share in the comments what it is, because I've not got time to look it up, but you get the point. A lot of Bitcoin. Because it was all institutional investors, and it dominated, despite the fact that at times you would pay a huge premium. Why would you pay a huge premium? Because when people, you couldn't very easily extinguish the shares or increase the shares. And so it's really it's a less superior way of tracking the price of Bitcoin. And at the moment, it's trading for a significant discount. Why? Because the ETFs are coming through. And since the ETFs are coming through, which can then extinguish shares as they buy and sell Bitcoin in a much more fluid way, it's a much superior way of tracking the price. And the reason that Gbtc is trading at a premium is because people are swapping out in order to use the Bitcoin ETF to get the same level of exposure, but without the structure, the more restrictive structure in the middle. Just by the side, Digital Currency Group were the people behind Grayscale. Grayscale were the ones that had the dominant market. Digital Currency Group, we've done many co-investments at Bank to the Future in many of the crypto companies. Many of the companies that built the industry, Bank to the Future and Digital Currency Group were often co-investing in many of those deals. So it's got about $40 billion of Bitcoin locked up in Grayscale, which is owned by Digital Currency Group. And that's simply, and now that's trading from a premium to a discount on the announcement of the fact that these ETFs are coming through. So obviously now this is starting to come through. We may at some stage, the real announcement that everyone's waiting for has not happened yet, which is that what people really want is they want what happened to gold. And so gold started out in, I think it was 2003 when the ETF came through. Price of gold was about $350, give or take. And it started a real adoption cycle and bull cycle for gold. So people are looking at that and saying, will the Bitcoin ETF do the same thing? And certainly the bull trend has started on the back of this announcement. And that's why we're approaching, at the time of this recording, new all-time highs again. But always remember the caution. I don't encourage trading, which is why my strategy, my approach to this is about being really excited about bear markets and really excited about bull markets. If you are not excited about bear markets, then you're probably in fiat thinking world rather than Bitcoin thinking world. Because bear markets means that your fiat gets to buy more Bitcoin. And therefore, fiat, if you're Bitcoin thinking, bear markets are way more exciting because you get to buy more Bitcoin, that you can get your paper wealth in fiat thinking in the bull market. So bull markets tend to drive you to fiat thinking. And then the switch we encouraging our clients and investors to make is Bitcoin thinking, particularly during bear markets. Again, a slight tangent. But that's why Gbtc is trading at a discount. And you got to remember, so Gbtc is priced in dollars, but it's because other ETFs have been coming through. So in Canada, they've been looking at getting more of a dominant position in this, and they've been approving ETFs left, right, and center. So Galaxy and various other people have all been launching ETFs, but they're denominated in Canadian dollars. And Canadian dollars have not typically recently been performing well relative to US dollars. And that's because of the monetary renegotiation, and head back to the video series that we'll be covering on the live broadcast in the dominance and importance of the dollar until the monetary renegotiation starts to make the dollar less significant, as it is backing up the world's largest regulated Ponzi scheme we've ever seen in financial history. But because of that, but a word of caution as well, when you're a while ago, several years back, when I left investment banking, I had this was back in, when did I leave? 2006, when I left market making. No, in corporate finance I was working in at the time, helping companies, venture capitalists, take their companies public. And when I left in 2006, I had this pension left over, and I didn't really know what, much to do with it. It was done through a self-invested personal pension. So I figured out a way of transferring that pension over to Hargreaves Lansdown. I had a relationship with Peter Hargreaves. He was a seed investor in one of my previous companies, and he was the founder of Hargreaves Lansdown. That's one of the UK dominant players in terms of mutual funds and ETFs and various other things. The only way to get exposure to Bitcoin around about 2010, 2011 was through some innovative products that were denominated in Swiss krona. And so I took all of that and I put it in my Swiss krona Bitcoin product, as it were, a unit trust or whatever it may be. I can't quite remember the structure now. And I look back at it and, it's significantly outperformed any of the pension products that I had at that time because I just completely forgot about it. But there is a double currency risk. So you're looking for exposure to Bitcoin, but then there's also the fact that it's denominated in Swiss krona, and the same would be true for the Canadian dollars ETFs. And so when we're in a completely dominated US dollar world, you're looking for the US dollar ETF, which is why that has been the big announcement and big thing. But people are looking for the Bitcoin backed ETF, which we don't have yet. We have a Bitcoin futures backed ETF. So one more concept that rounds off where we are right now and what to expect and what to look for next is, if I were a trader, which I'm not, and I'm discouraging that, but the types of things that I'd be looking for from here is the Bitcoin futures ETF is not quite the announcement of the Bitcoin ETF. The reason for that is because Bitcoin futures are simply derivatives financial products where two people enter into a contract and agree to settle an amount of a commodity in the future. And most of them are just simply contracts where in the case of Bitcoin, it might be a Bitcoin miner that needs to hedge some of their exposure in order to pay some of their electricity against speculators that are looking to lever up their money and gain control or exposure to Bitcoin without having to put too much money down, and therefore they can end up blowing their whole thing through rampant speculation. But it's a very popular type of product, is a futures product. But most of those futures, this is why when you have futures products, is people not really buying Bitcoin. Instead, they're buying Bitcoin futures. And in this way, it creates a parallel market outside of what they call the spot market, which is where you actually buy the Bitcoin through an exchange. Remember, if you're buying it through a crypto exchange, you're actually just getting a balance in that account. You're not getting the Bitcoin until you withdraw it. Tangent again. That's the way that a Bitcoin futures work. So the ETFs that have been approved is an exchange traded fund that gives you exposure to Bitcoin futures, and Bitcoin futures may not necessarily mimic the price of Bitcoin. And in fact, there's many arguments out there that many people argue that gold futures are used in order to manipulate the price of gold. Because the underlying and the futures contracts end up in these relationships. And so you're going to see a lot of people talking about the relationships, and that's why the CME futures markets was actually the trigger point for the last bear market. Now, if you unwind out into a logarithmic chart and you go out a little bit further, you realize that Bitcoin's been in a bull market for 12 years, but people focus on those corrections that they call bear markets as well. So this is one of the things to look out for, and people will be talking about. That's what happened. And then shortly after the gold futures ETF, you had a gold ETF, and then that's locking up a lot of the gold supply because it's actually backed by real purchases, just like Gbtc is in Bitcoin. And what tends to happen is that unlocks Bitcoin from the circulating supply, although it has its other challenges in that it is centralizing a big chunk of Bitcoin into one financial institution. These tend to be longer term hodlers, and depending on the structure, if they're doing it through trusts or whatever the structure may be, they can't re-leverage those assets and rehypothecate because it's tightly regulated. But they can launch additional financial products that allow people to lock up some of that and collateralize so that they can get loans and various other things that may the typical innovation that's happening in traditional markets will happen in the Bitcoin markets as well. So what does this mean for you anyway? This is not the news that everyone was looking for in terms of the bull market. So I'm not expecting a short-term top in the market at this stage. I'm expecting that to come when the Bitcoin ETF comes through. And the Bitcoin futures ETF, I expect, is a precursor to the Bitcoin ETF. The number one complaint that the SEC had was market manipulation. And certainly there is manipulation in the bit markets, as there is in every market. But they're not comfortable with spot exchanges, and many of them operating, outside of their jurisdiction. And so therefore they grew comfort with CME futures markets, and therefore regulated and did their first experiment with that. But the real announcement is when the Bitcoin ETF comes through. That's what people are looking for. And that may be, if you were a trader, and again, discourage trading, can't give you financial advice, but I'd be excited about that triggering the top and going into a phase of Bitcoin thinking accumulation where you can buy cheaper. Again, not designed to give you any kind of trading advice, but those are the types of trends that I'd be looking for. Right. What does this mean for Bitcoin? Well, in a sense, many people will be focusing on futures, price manipulation, and various other things. I don't care about price manipulation because triggering bear markets is awesome for Bitcoin accumulation when you're a Bitcoin thinker, bad if you're a fiat thinker and a trader. Unless you're on the right side of that, then you could be the manipulator trying to get on the right side, and you need to be a whale in order to do that. But this significantly takes out many of the objections to Bitcoin. Bitcoin being a something that governments are going to ban means that because there are retail indirect, so ETFs are indirect institutional products where institutions make those decisions, and retail can maybe doing that indirectly or fully retail, which a ETF does. The likelihood of the government coming along, approving an ETF, and then saying we're going to ban Bitcoin and screwing up people's pensions and retirement plans significantly reduces. Just like the FUD around, that China is centralizing Bitcoin and using that as a reason not to buy Bitcoin, we start to use more and more reasons and excuses around this big boogie monster ban that's coming through, and the ETF significantly reduces that likelihood of that happening. Again, most money is held by institutional investors, but you also have ETF buying pressure, and that's where you get these innovations as well. And regulators were, after all, meant to be about investor protections. Over the years, it's changed to tax collectors and AML law enforcement, which is code word for tax collection, and against consumer protections. But there's still an element and a few divisions that look for investor protections on top of the investor unprotections that have been implemented ever since many of the law changes have gone through. So the big announcement that I'd expect to trigger a major market move and speculation would be Grayscale being approved in order to be an actual Bitcoin ETF. And I think that's the type of precursor with the Bitcoin futures ETF to something that you would see. And that may mark the short-term top and moving into Bitcoin thinking accumulation phase. And so that is everything that I wanted to cover in the ETF. Now, I would normally cover things in a different segment. So I'm going to cover the announcement, and I'm going to move over to a screen share for this one before we go into answering the most upvoted questions. If you enjoyed the content on ETFs, then we're going to move over to central bank digital currencies right now. If you like it, hit that like button, retweet, share. We want as many people to be involved in the live masterclass that we're doing. And I'm going to be ramping up the content leading towards that. So do me a favor. If you're enjoying this, please do share, please do like, and hit that subscribe button so you get the notifications from YouTube when we go live for that. So now, without further ado, let's move over to the next topic. And let me see if I can just get the screen share working and the sound working. And I'm going to move over to my Twitter. I think you can see me in the corner of the camera there. If everything is working, Azad, could you let me know? Can you see a Twitter stream with the old video in front of us?
Yep.
Okay, excellent. I'm going to make this video full screen and just let me know if the sound is not coming through well. Can you see full screen?
Yep.
Awesome. This is our good friend, the Chancellor Exchequer in the UK, with a very smug grin as he announced the beginning of the next phase of the monetary renegotiation to shift our economies from capitalism to communism. So let's go straight in, and I'm going to give a bit of commentary so that you can read between the lines and understand what that smug grin is actually saying. So I'll play the first bit.
Today, I'm proud to say that under the UK's presidency, the group of the world's 7 most advanced economies, the G7, is launching a set of public policy principles for retail central bank digital currencies.
Okay, so let me unpack the code words there. This means that the top economies in the world, the G7, are looking at how they are going to implement the monetary renegotiation that takes away all of your rights, all of your privacy, and gets ready for a war on banks as well. So you're going to see a lot of bank lobbying efforts against the negativity of this. We already started to see interesting reports from Bank of America where they were talking about how bullish they are in the case for Bitcoin and DeFi as a result of these central bank digital currencies. Because what does it mean? This changes the rules. Many people talk about, they focus more on the wrong thing. They think it's the digital part of it. So they think it's the digital money that's the innovation. The innovation is actually the monetary renegotiation that I covered over a decade ago in my book, Bank to the Future, Protect Your Future Before Governments Go Bust. This is a fundamental reform in banking and changing the rules of money to who actually creates money and how it is backed. This moves us away from a debt-backed monetary system where private banks create the money backed by loans to a central bank digital currency dominated system where money's not backed by debt, but is backed by the whims of the G7 that are making sure that they are statistically significant as the dollar moves from the world's largest regulated Ponzi scheme to a ginormous shift in currency wars. And they're making sure that they are aligned and together in order to shift and gain the control and remove the privacies and human rights of all humans through the central bank digital currency.
CbdCs. Central bank digital currencies could be a digital version of money, a bit like a digital banknote that could be used alongside physical notes and coins.
A lot unlike a digital banknote, which gives you full privacy and the ability to own your own money. Instead, we would like you to take all the money like we did with Indian demonetization, where we got all of the people in India several years back that drove them into Bitcoin because we said that your cash and coins is no longer legal tender, and therefore you need to swap it up into bank money created the Indian rupee, and you're going to have to stand outside with your lifetime savings and risk getting all your money stolen, and we're going to run out of the notes because we want you to digitize it so that we can have full control over all money. Saying that a central bank digital currency is like cash is a lie, it's misleading, and it's very disingenuous.
Unlike most of the digital money people use daily today, it would be issued directly by a central bank, like the
i.e., it no longer needs to be backed by debt. We're moving further away from free market capitalism. I'm a big critic of fractional reserve banking, which is the process by which banks create digital money, which is a representation of the money that governments create. But at least it's one step removed from full government control. This is moving back in the direction of the central bank issuing it and removing more of the free market forces. I'm not a big fan of debt-backed money, but at least it's backed by some kind of market force. And this is the complete removal of that. And war on banks as well, which I'm a big fan of. And I said it was inevitable, predictable, and guaranteed, but you have to know the side consequences so you can understand what forces are at work here.
The Bank of England in the UK.
And the Bank of England, which was a private company founded in 1694 in order to fund wars, which has gradually been nationalized and nationalized over time, that is meant to be fully independent, but also is the creator of money in order to implement mass theft of people's savings through inflation and through ginormous tax increases that slowly drives us towards the removal of free markets altogether.
Governments and central banks across the world are working together, looking into what having a digital currency might mean in practice.
Awesome. We can look forward to the cartel backed by a basket of different currencies. This will have immense improvements on user experience, but it will kill your ability for freedom. So they can make an awesome currency that's very easy to use for everything they want you to do, but you won't be able to own it. You won't be able to spend it if they don't like how you're spending it, and it will be depleted in value because of the excessive supply that it will release into the economy. But on the other side, they can implement their algorithmic artificial intelligence-led monetary policy that we talked about in the monetary renegotiations.
This includes issues that people care about, such as ensuring users' money would be safe and secure, that it...
Yep, so you get to have it safe and secure in somebody else's hands where you can't own it, and people can tell you whether you can spend it or not. And if you subscribe to a particular school of thought which is not in line with government agendas, i.e. you think that you're not ready for a vaccine or something like that, then they can switch off your passport, connect it to your purchase, connect it to your central bank digital currency if they choose, so that they can automate that whole process and give you everything you need in your cash.
Could work with other ways to pay, would be energy efficient and available to everyone.
Oh, a little dig at Bitcoin, energy efficiency. So we've been dealing with that one. This is the big movement towards central bank digital currencies. But Bitcoin is backed by proof of work. Proof of work is a cost that is needed in order to have private money that no one can change, everybody can own, and everybody can spend freely. Spend freely. The opposite of that is energy efficient, non-proof of work backed central bank digital currency, because we don't need any kind of decentralization. We don't need people to expend electricity in order to create the world's largest supercomputer and have thousands of people all around the world audit it. Instead, we want to be the complete controllers.
A potential CBDC could offer businesses and consumers new ways to pay in the future. It's all part of the wider story of digital innovation that has delivered benefits to millions around the world and in the UK. The decision on whether to launch
It sounds like he's talking about Bitcoin, which is giving people the ability to own their own money, spend their own money, and hedge against your ridiculous policies of money printing in order to inflate away everybody's savings. But no, he's talking about the central bank digital currency, which will actually do the opposite.
The central bank digital currency is for each country to make, and no G7 jurisdiction has yet made that choice. These decisions raise important questions.
No G7, China's done it. China's very open about the way, because they are a communist-led party country anyway, and they're happy with the way that they're organizing their economy. So we need to try and compete and pretend that we're not becoming like China. But China's ahead of this situation. They're getting ahead in technology. They're getting ahead in central bank digital currencies. We better do something, because the future is China.
About the reshaping of our economy, financial systems, and the way in which people interact with money and payments. That's why working together and careful evaluation with our international partners is essential. In the UK earlier this year, I announced a new joint task force between the Treasury and the Bank of England to look into a potential CBDC.
Yeah, this is the independent government that has a structure where the central bank is meant to be independent of government policy, but we need to set up a task force so that we can figure out how to print all the money, take down the banks, and get people to opt in to our new central bank digital currency in order to gain power in the monetary renegotiation.
As a complement to cash and bank deposits. We're also hearing from firms, technology experts, and others. Under the leadership...
Of course, the firms also want to own a piece of the central bank digital currency. So now that everybody's seen the innovation, private companies are looking at doing what they're doing because of the innovation that came from stable coins. And now our industry, congratulations people, we have made an industry that has shaken up the world, that has made governments react. And I always said Bitcoin is a regulator of the regulator. It keeps fiat currency more honest, and it creates this nice tension and competition in the upcoming currency wars.
Of the UK, this report today will help support and inform exploration of CBDCs in the G7 and beyond. With these principles, the G7 is leading an important step change.
Okay, I'm going to puke, so I'm going to stop that right now. Azad, let's jump into the questions. So the monetary renegotiation is happening. The geyser of it is improvement in payments efficiency through central bank digital currency. Remember, this is radical banking reform, as discussed in my book over a decade ago. And what I said in 2016, when all the Bitcoin community were poo-pooing who's going to want to use a central bank digital currency. Well, when your banks go in bust and you've got your savings in there, then central bank digital currency is a compulsory opt-in process. As discussed many times in countless broadcasts. Okay, Azad, let's jump into the Slido board. What have we got as the most upvoted questions?
Simon, you're on fire, and everyone who's here with us right now are loving it. Okay, so the first question is from ML. Gold and silver prices are kept low by the issuance of paper contracts. The ETFs open the doors for the banks to artificially lower the price by flooding with such contracts. They can kill the competition. Will Bitcoin go the way of Australia and Argentina?
So I've always talked about this, that Bitcoin is not immune to manipulation. People confuse it thinking that Bitcoin has this ability to suddenly not become manipulated. But the rules of Bitcoin can't change. It's a scarce asset out there. And so if people want to short-term manipulate the price around futures contracts, then as I said, I'm not fiat thinking, I'm Bitcoin thinking. And Bitcoin thinking is manipulation that drives down prices is a great way to accumulate more of money that you can own, money that you can spend, and the scarcest digital money and our world's best shot at ever achieving a digital hard sale money. Bring it on. If you're fiat thinking, then you'll be scared of this.
Okay, question from Mark. I have zero trust in government and institutions like IMF and WEF, which is World Economic Forum. I hold Bitcoin in cold storage, so I have control over my money. What else can I do to protect myself? Thanks, Simon.
So I do believe you do need to hedge against some of the exposure of Bitcoin. There is one of the things we talk about in Retirement Plan B is this concept of buckets and bucket allocation. So having a security bucket, because at the end of the day, Bitcoin is not a very good medium of exchange when you have to pay your rent or pay your mortgage or pay the things that you've been saving up in your dream bucket. In the fiat thinking world, you're going to have to pay those in fiat. And so you've got to have smart asset allocation to prepare for different eventualities. So you're preparing for one eventuality, which I do believe is something that I have, but I also have different buckets and prepare for a bit more asset allocation, which is some of the things that we work with, and we'll be covering in certainly the live masterclass, and that's an important part. So being fully exposed to Bitcoin is satisfying certain parts, but there are other parts that I believe need to have a well-rounded and be ready for anything ahead.
Miyu asks, we will launch BFT DAO. BFT DAO is the voice of BFT holders. The BFT community wants to work hand in hand with the centralized organization Bank to the Future. DAO and centralized organization equals superpower. What do you think?
If anyone wants to launch the BFT DAO, then the nature of a decentralized autonomous organization is that it's decentralized. So we would have no control over that. And so go for it. Go for it. If anyone wants to do something innovative there, the BFT is an Ethereum based token. And so, interested in your ideas around that.
Mark asks, will these ETFs lead to the kind of price suppression in Bitcoin and by extension, the rest of the crypto market that we have seen in gold and silver? Additionally, do you think this could cancel the bull market for this year?
So I think people are confusing ETFs with futures, and we already have Bitcoin futures. And the fact that we have a Bitcoin futures ETF is not normally the mechanism that people would use in order to manipulate prices. That would normally be a Bitcoin, the actual Bitcoin futures, which is something that, as we talked about earlier, mark the top of the bull market and creates this added short-term speculator-led frenzies when these contracts come to expiry dates and people need to settle their contracts.
ML asks, Prime Trust don't adhere to UK banking processes, so debit card payments can't be made. Can you either get them to change their procedure or find a new provider?
So this is a question for Bank to the Future. It works with Prime Trust. The reason we work with Prime Trust is because US regulations require it, and they do have a not very nice credit card process where they can't give you an instant answer, and we have complained about that many, many times. Hopefully they're listening and they change.
Okay, another question about Prime Trust. Prime Trust seems to be...
Let's skip those because it's off topic.
All right, let's do that. Okay, Anonymous asks, when will I be asked for documents to prove my immense wealth?
So I think, again, off topic, if we could stick to ETF stuff, but I'll answer it while it's there. So if you are engaging in products that are only available because regulators say that they are only available to those people, then normally you have to document it. So I think it's referring to the fact that at Bank to the Future, we have to get our regulators requiring us to get documents from those people to provide their wealth. This is the same with every cryptocurrency exchange that you're going to start seeing because there is a regulatory crackdown that we've covered in Constant Broadcast.
Rach asks, gold prices are manipulated by ETFs. Will the same happen to Bitcoin?
Answered.
Lucy asks, hi, Simon, can you tell me how I can leave Bitcoin to my children and grandchildren in the UK?
Yes, so inheritance is a part of what we cover in the Retirement Plan B online wealth management program. So that's a big part of it. But yes, inheritance is one of the big challenges. And you need to put together a very specific plan of how to do that. Particularly, there's two, you can either have some held with a custodian, some that you hold with a private key, and then have a solid plan of how you pass on that private key or you pass on those custody relationships. That's a big part of what we support people doing and one of the major modules in the wealth management program.
Question from Anonymous. Do you think Bitcoin is running a risk of being over-regulated?
Every single financial product, all your money, everything is going to be over-regulated. The trend is towards more regulation. That trend was triggered, from the Great Depression of the 1930s, and it will continue and continue and continue. So over-regulations is exactly where we are. Now, I'm all for investor protection regulations because I think that those are necessary with centralized companies, but I don't like the regulations that are pretending to be investor protections, which are really a code word for tax collection, which is, pay your tax. We help people put together optimized structures. But we discourage people just not paying their taxes, and we get a lot of problems from that, from people that are saying, "No, I don't want to, because I own Bitcoin." But always do these things in the right legal way. But certainly, over regulations of everything is, one of the user experience problems with banking, and banks get a lot of shit, but they're just doing what the regulators require them to do and ruining the user experience and money. Because those agendas that are behind those laws.
Do you believe XRP will be used to facilitate cross-border payments between CBDCs?
I don't know why anyone would do that. They don't need XRP in order to do that because these are going to be centralized. They're not going to require any type of blockchain. They could do the token blockchain. But I don't see why any of them would use a public blockchain. They wouldn't want to relinquish any type of control because that is not the goal of central bank digital currencies. Central bank digital currencies are to improve the user experience of money by taking away all of the challenges by having complete control and then being able to ruin the user experience of money by not giving you the opportunity to own your own money, spend your own money, and having a supply that always means that you need to algorithmically spend it because they're operating a debt-based Ponzi scheme. And the rules of money are that in order to have more money, you have to have more debt. In order to have less debt, you have to have less money. And now they want to introduce a new money supply in order to combat that force and hedge against the exposure that's created in the banking system so you can swap out their money. Why anyone would want to use XRP in order to do that, I got no idea.
I already can't spend my money. Many UK banks will not allow me to send money to crypto exchanges. Is it time to name and shame these banks? Shall we start piling on the pressure to change them?
It will change naturally because banks will need, many of them are getting into Bitcoin. Many of them will need to get into Bitcoin, and they will start to become a part of the same team as they offer some Bitcoin financial services. It was significantly worse back in the day. It's a lot better than it is today, but still a long way to go. And yes, name and shame. Everyone knows that they're not going to let you send money. Everyone knows that Barclays SMS people, because Bitcoin's so significant, we need to text message everybody and tell them that we won't support these transfers. But fortunately, we've been funding the next wave of crypto-friendly banks at Bank to the Future. And there's a lot of innovation out there, but you just got to look a bit more outside what you're used to, outside your comfort zone, and forget the big clearing banks. They got no interest in supporting this industry until it's statistically significant that they have to. Here's the thing about central bank digital currencies. Central bank digital currencies are central banks waging war on banks, and therefore the counterforce to that is Bitcoin. And so more and more banks are going to look at how they can support Bitcoin as a mechanism for staying relevant in the government attacks that are coming in the upcoming currency wars and monetary renegotiations.
Australia equals gold, Argentina equals silver.
Okay, not a question, but cool.
Right. Mark Edinburgh asks, do you think any Western governments will ever publicly endorse Bitcoin in the future?
Yes. The ones that will do that, and I covered this on previous broadcasts about the different types of governments out there. You've got challengers. So we've got we've got countries like El Salvador that are making Bitcoin legal tender. And they just happen to be not a Western country, but they're implementing the experiments, and that's been followed up by another wave. And so if you want to remain statistically significant, it's David beats Goliath. Owning Bitcoin is the way that retail took out Wall Street. Retail got into Bitcoin before Wall Street did, and they became the next generation in one of the big wealth redistribution, and generated significant wealth that made the next wave of Bitcoin millionaires, billionaires, and soon trillionaires. Now, whether countries want to get on board, of course they do. I've been guiding countries for a long time to take a portion of their electricity and allocate it towards mining Bitcoin, and take some of their reserves and put it on the central bank's balance sheet, so that they can do what Bulgaria did when they confiscated a bunch of Bitcoin from a criminal organization, and ended up having more Bitcoin, the value in fiat being more than their national debt. And every country has that opportunity. And I believe that in currency wars, this is the smartest move. This is the move that countries should be making. Now, if you are an incumbent and you own the US dollar, then you have the least incentives to take this strategy. If the US announce that they're putting Bitcoin on the Federal Reserve's balance sheet, or the government's hedging with Bitcoin, that's like saying the dollar's over and we're hedging our bets. They won't do that. They'll take it to the end. They'll remove all free markets. They'll move to communism before they even try and take away some of that control.
Okay, question from Don. How can we help Western governments, democracies, move towards the Bitcoin standard, which in turn would counteract the real threat of a weaponized digital yuan becoming the next global reserve currency?
So if you have initiatives on what you want to do to get your government involved, I've did this many times, and what I found is that it's a natural force. Since 2011, I've been trying to support as many individuals, governments, currencies, institutions, fund managers, companies, understand the importance of owning some Bitcoin. And what I found is that they all naturally come over anyway. So it's like this natural force that it was beautifully designed due to the economic incentive mechanism that was built into Bitcoin that has made it our world's best shot at ever achieving digital hard sound money, which is over time just driving more and more people through necessity rather than having to, be persuaded into that or anything like that. So my force of this is think long term. It's a natural force. Obviously, there are inherent risks that need to be understood in Bitcoin, and we'll be covering those in the live masterclass, where I'll go through many of the reasons why to own Bitcoin and why not to own Bitcoin as well. It's not a one-sided argument, but I think it's a natural force. And any country that wants to get ahead of this curve, Bitcoin rewards the saver. Governments don't like to save, they like to spend debt. Fiat rewards the debtor. So the government is the larger debtor in every country, so they're playing the fiat game, coaching them towards understanding Bitcoin game. And this is where the ETF, this goes full circle. This will be the last question. This goes full circle, and this is why many of them are using custody, ETFs, and various other things, because the process of owning a private key, just like in Bulgaria, they confiscate. Guess what happened to those Bitcoin? They ended up in the hands of corrupt officials, because owning your own money is pretty tricky for an organization and institution. So they tend to use custody relationships in order to have a layer of governance where one person can't steal all the money in multi-signature transactions and various other things. And so the good thing is that companies like MicroStrategy really paved the way in figuring out how to do on their company balance sheet and educating many people to implement the same things. So Azad, I think we're going to take that as the last question. Yep, we're on the hour now. So I covered two different topics. I'm sure this time next week, the whole world would have changed since this week. In the time we've been recording, we've gone from sunny to dark. And we covered as many questions as we could and gave the updates on central bank digital currencies. As I said, I'm in full-blown content mode. So this time next week, we'll be going live on my YouTube channel. So if you enjoyed this content, if you think that this is something that other people should be listening to, then I ask you one thing. Please hit that like button right now. YouTube is useless on the algorithms at finding good content in the crypto space. They tend to be supporting Ponzi schemes and people giving you pumps and dumps and all stuff. So if you want people to understand, real responsible ways of adjusting to these economies, then hit that like button. That's the favor that I ask you, and subscribe to that channel because I've got a lot of content that we're planning for you over the coming weeks, and we're moving into that marathon live masterclass that we're going to be giving in November. And this time next week, we'll reveal full details on how you can be involved and participate in that. So always remember, we've got Bitcoin ETFs, we've got central bank digital currencies, and we've got whatever comes next week. But we are alive at one of the most interesting and exciting times in financial history. I want you to be on the right side of that change. So always remember that no matter what happens, get on the right side of that change. Subscribe to the channel and make sure that we keep you up to date.